on the big board. That's it. So if we trade with it, life is easy. Trade against it, life is tough. And that's going to be the message of today's classroom. We'll obviously look at that as we develop out today's classroom, and we'll see what we've got for you this afternoon. But anyway, welcome in. Let's get through today's numbers. Today is Monday, the 15th of May. It's 20 past 1. Data-wise, we do have some data out at 1:30, so we'll get through this quickly. We do have Empire State Manufacturing at minus 3.7. Forecast was for minus 3.7 prior, 10.8 positive. So quite a disappointing manufacturing number. On top of that disappointing number, we've seen some disappointing numbers out of the Eurozone, where we saw Eurozone industrial production expected to fall by 2.5% month-on-month, drop by 4.1% month-on-month. That's not a good number at all, is it? That's not a good number. But anyway, moving on beyond that, Japanese PPI numbers came in a little bit hotter in the overnight session at 5.8%. Forecast was 5.6%. German WPAs came in a little bit softer at minus 0.4%. Forecast was a gain of 0.3%. So softer inflation, but on the back of softer industrial production numbers. In terms of other things, we've obviously got housing starts out of Canada have already been. They came in at 262,000, 221 forecast. And then we've got the main numbers for the day, which is the Empire State Manufacturing. That's the Empire region in New York, coming in this afternoon. So we've obviously got the minus 3.7 forecast, 10.8 positive prior. So obviously a drop off in manufacturing again in the Empire State. And again, this has been a number that's been very, very weak. But the big number from last month, of course, kind of bucked the trend, started to change that overall direction. But obviously, if we post another negative, it doesn't change the trend to down. It does keep the trend positive. But if that number comes in a really disappointing number, say minus 10, then of course that could change things quite dramatically. So manufacturing in the US not really starting to catch fire just yet. That's not a bad sign for equity traders. Obviously, it's one of those Goldilocks trades again, whilst we're in this Goldilocks zone of will they, won't they. At the moment, it seems as if we're now done and dusted. Let's just check on that done and dusted narrative, of course. When we're looking at the done and dusted narrative, we're talking about the Fed on hold. Well, the Fed on hold for the 14th of June meeting is currently priced at 84%. 84%, guys, Fed on hold. So you can obviously understand that. So one of the things that we do recognize is the current difference of what's going to happen between the ECB, the Bank of England, and the Fed. The Fed is on hold 14th of June. The Bank of England is rising 25 basis points 22nd of June. The ECB is rising 25 basis points 15th of June. So obviously during this current period, the trade for Forex traders would obviously to be buying dips on the euro dollar, right? So if we're buying dips on the euro dollar, buying dips on the pound dollar, then of course we can start to recognize some of those opportunities. You can see that buying dips on the euro when we go below here, for example, this week, we can see there's been some nice opportunities to buy some business into these areas. And you can see obviously that that's the main macro Forex trade for the time being, based on the idea that the percentage probabilities are there. Now, obviously, if the probability starts dropping out from the ECB, so will the euro. If the probability starts dropping off for the Bank of England, so will the pound. So we see this relationship of these two markets in terms of the carry trade, for example. That should show up on your carry trade narrative. So something to watch for at the moment. The diff is going to be changing by 25 basis points between the Fed and the ECB, Bank of England. And that's obviously going to be meaning that on a macro chart basis, we should be long euro dollar dips, which probably means long oil on dips as well, doesn't it? Yeah, see how that works? Crazy, isn't it? How simple it is. So long oil, we were obviously buying oil this morning, assuming the dollar was going to be offered. The dollar was offered. We bought oil and we made a lot of money. Wasn't that difficult, was it, guys? No. Came into the London session open. We had already seen the bids coming in from Moscow. And as we came into the buy side in the London session, we got a little spring trade and we made our $1,000. Do you see what happened at 780? Remember I says that we are going to be selling our stock. Well, that's what happened at 780. The big sale came in at 780, didn't it? No surprises again there. So if you flipped it, that's a bold trade, but I like it. I like it enough. Very bold of you to flip into that 780 short sell for 20 ticks. You got to do a trade somewhere, right? You're either long or you're selling that top edge. Anyway, whatever you took, you've made money on it. So that's pretty good stuff. The easy stuff done well, guys. That's all you can ever do. The easy stuff done well. So as I said, data coming out now in just 5 minutes time. It's the Empire State Manufacturing. The forecast is for a drop of 3.7. The previous was 10.8. So obviously that's going to be an interesting number. It is a fairly interesting number. It is a market moving number. So just bear that in mind, and we'll see what it has for us. See if it is a big drop that bucks the most recent bit of a rally on Empire State Manufacturing. But if it's a bigger drop, say -10, then of course that's going to put that back into negative, solid negative territory. And if it does better than that, then of course that positive trend is going to be getting better. So welcome in, guys. Going to grab a little bit of lunch. And this afternoon's classroom, we'll be talking about sentiment. We'll be talking about trying to keep you with the sentiment of the marketplace. And that's what we'll be talking about in classroom this afternoon, guys. So welcome in.